So, you've probably heard this word thrown around a lot with Fastly's latest results, inflection. But what does that actually mean? Well, today, we're going to unpack that. We'll dig into the record breaking numbers, see what's really driving this shift, and figure out what it all means for what's coming next. Let's jump right in. Okay, before we get into the weeds, you know the drill. We have to say this. This whole breakdown is just for educational purposes. It is not financial advice. So make sure you're doing your own homework. All right, with that out of the way, let's get back to Fastly. Right, so that word, inflection, it's not just a buzzword. Fastly's CEO, Kip Compton, chose it very deliberately. He's basically saying, hey, this isn't just a good quarter, it's a fundamental shift. It's the moment the whole story changes direction. So we're going to see if the numbers actually back that up. So here's how we're going to tackle this. First, we'll talk about what this turning point really is. Then we'll hit the big, flashy numbers. After that, we'll go a layer deeper to see what's behind those numbers. We'll check out their strategy in action, and finally, we'll look ahead to their forecast for the future. All right, first up, what is this inflection point all about? Well, think of it this way. For a while now, Fastly's been going through a big transformation, and this is the moment they're saying all that hard work is finally paying off in a big way. They're not just saying, hey, we had a good quarter. They're saying this is the start of a whole new chapter. One where they're not just growing fast, but they're actually making money doing it, and they plan to keep making money. Okay, talk is cheap, right? Let's see the proof. What are the actual numbers that are making everyone talk about this so-called inflection point? Let's dive into the headline figures. First up, a big one, 23%. Just let that sink in. That's how much their revenue grew in the fourth quarter compared to the same time last year. That is some serious acceleration. And to put that percentage into real money, we're talking about a jump from about $140 million to almost $173 million in just 1 year. That's a huge leap. But you know, growing revenue is one thing. Being profitable, that's the real game changer. And get this, in Q4 of 2024, they actually lost about $2.8 million on an operating basis. Fast forward 1 year, and boom, they've swung all the way to a profit of over $21 million. That's not just growth, that's smart, profitable growth. A massive difference. And okay, if you want a sneak peek into the future, check this number out, 55%. That's the growth in something called RPO. Don't worry, we'll define it more in a second, but basically it's money they're guaranteed to make from contracts they've already signed. Seeing that number jump 55%, yeah, that's a huge, huge sign that the good times are expected to keep rolling. All right, so those big numbers are pretty amazing, but what's really driving them? Let's peel back the onion a little bit and look at the engine room metrics that are making all this happen. So let's circle back to that RPO number we just mentioned. Again, it's the total value of all the contracts they have signed but haven't billed for yet. It's their pipeline of future business. And that pipeline grew to over $350 million. You can see why analysts get so excited about a number like that. Okay, here's another really important metric for any company like this, net retention rate. It basically answers a super simple but critical question. Are your current customers happy? Are they sticking around? And even better, are they actually spending more money with you this year than they did last year? Well, Fastly's answer is a big yes. The rate is 110%. Think about that. It means they took their entire customer base from last year. And even after accounting for anyone who left, that same group is now spending 10% more. That tells you they're not just finding new business. They're doing a fantastic job of keeping their current customers happy and selling them more services. So where's all this money coming from? Unsurprisingly, their main business, network services, is still the lion's share at 76%. But that's not the most interesting part of the story. Look at the smaller pieces. Security is growing at 32%. And their other stuff, like their compute platform, that's up an incredible 78%. This shows they're not a one-trick pony anymore. They're successfully building out other parts of the business. Okay, so the numbers are great, but how did they actually do it? What moves did they make this year to pull this off? Simply put, 2025 was a year where they just got things done. Sure, they locked down some financing to make their books look stronger, but the real story was innovation. Remember that 32% growth in security? That didn't happen by accident. It's because they launched new tools like API inventory and beefed up their DDoS protection. And they're already looking ahead, releasing a beta for an AI assistant. It's no wonder they won a Gartner Customer's Choice Award for the 7th time in a row. They're clearly executing. All this momentum is great, but it brings up the million-dollar question, right? Can they keep it up? Let's see what the company itself thinks is coming next in their official forecast for 2026. And here it is. For the full year, they're predicting revenue somewhere between 700 and 720 million. And look at the operating income, a solid 50 to 60 million. The message here is clear. They fully expect this growth and this profitability to continue and even expand. So what's going to fuel that future growth? The CEO was really clear about this, and it's the buzzword on everyone's lips, AI. He called it an increasing tailwind, which is business speak for a huge growth driver. They are betting big that as more companies use AI, they'll need Fastly's platform to make it all work fast. So let's wrap this up. Fastly has put the numbers on the board, they're keeping their customers happy, and they have a clear plan. It really does look like that inflection point they talked about is here. And the big question now is, as they ride this massive wave of AI, just how high can this new momentum take them? It's definitely going to be an interesting story to watch.